to hold your money. I have, by the way, I'm going to cover what you should be doing, because I believe that having money in the bank is just a waste of time. And I'll tell you what I do with my money. So we're actually losing money when you keep money in the bank. And then comes the fourth attack, which, as we know, the more there is of anything, the less value there is. And with all the money printing, of course, the means that the money that we have in our pockets is worthless. And by the way, here's a surprise. There's some more attacks I didn't even tell you about, right? So if you want your children to have a good education, you need to pay for it, depending on which country, of course. Your parents are not getting any younger. Retirement homes are getting more expensive. One day you might realize that your pension, I know people that have put everything in their business, everything. They didn't put 10% away and put it into stocks or cryptos, the things I'm going to talk in just a moment. Just and they did really well until they didn't, and they lost everything. And I said, well, that's fine though, isn't it? Because you have put 10% away or 20%. No, I kept putting it back in the business. Now, I'm sure you're not making that mistake. And when the money stops flowing in, you'll have problems when you're older. And this is good news. We're all living longer. This is bad news. We're all living longer, because they say that if you were to give somebody on their deathbed, a pill that said, hey, listen, here, take this and you will live for another 25 years. Most people would say, listen, forget it. I don't have enough money with everything that is going on. So being attacked on multiple fronts, one or two is okay. I'd rather not, but it will literally kill your finances, because taxes alone won't kill you, but it just makes you weaker. Your money not growing in the bank, it doesn't kill you, right? It does make you weaker. Price inflation alone won't kill you. It does make you weaker. Your money becoming worthless alone doesn't kill you. You know what I'm going to say, right? But it does make you weaker. But it's this multiple effect of taxes and not getting it in the bank, and prices and inflation and the value of the money. And when you're hit on so many fronts, it has what's called a huge negative multiplier effect and literally kills your finances. It's just a matter of time. So I don't know whether people are commenting, but how do you feel? Are you feeling this at all? Did you know this? Is this something that maybe you knew about, but you were kind of like didn't want to face? Because this is real. This is real, especially now. What are people saying here? I'd love to know. Maybe I can actually have a look myself. Hold on.
People are saying things like, I knew this was happening. And, we've kind of been feeling, and we talked about it a bit earlier as well, is like we feel like all these attacks are coming. And then when you put them all together, you're like, oh my God, is there anything I can do? You got people like Andrew saying very true. You have Yal here talking about like, I just don't know how to handle. And then Francisco's like, I knew we were having all those problems. So,
Sorry, I'm laughing at Philip's comment. He says, I have no money anyway, so it doesn't make a difference to me. Okay. Well, interesting. Okay, thank you for that. Okay, so look, summarizing it, for most people, the road to financial slavery is trying, think about this, increasingly harder to earn the same amount of money not more, the same amount of money when everything is getting more expensive. At the same time, the money you're earning is losing value. So it's madness. But guess what? There is hope. What if I told you that your money doesn't need to dwindle away? Actually, it should be the seed of your financial fortune. Because at the moment, your money, and I don't know, everybody's different, right? It's being lazy, idle, not doing much. If you or somebody you know have ever had an accident, what happens to your muscles? They basically start to atrophy. They start getting weak by not using them. And it's the same with money. If you don't take care of it, move it around and grow it, it will stagnate or atrophy. And the key is to get your money working for you, which is why you're here, which is why you're listening to all these amazing speakers. Have you ever wondered why they call the Japanese yen, Great Britain pound, US dollar currency? Have you ever wondered about that? Why is it called a currency? The idea is that it's supposed to move around like a current of air or a current of a river. Have you ever thought of that? And if you don't do that, it stagnates. The bacteria get in. It's called bracken. It goes bracken, stagnates, because the bacteria, you can't drink that water. Well, you can, but you'll get ill. So literally, your money is rotting in value. So once you know that, they say the first step to change is awareness. Once you know that, you can do something about it. And the answer is very simple, is to learn how to grow your money, which is why you're here. Now, before you say, I don't even know how to do it, or I can't do it, you have been on here for quite a few hours, so you do know how to do some of these things, right? Imagine you could learn how to make your money grow by. I know that's scary for some people. I do understand that, of course it is, but it's like doing anything for the very first time. And some of you are more seasoned than others, of course. But imagine you could learn. And by the way, this is not us investing for you. Let's be very, very clear. This is all about, Genius, you, Roger, all the others. They're about you taking control of your finances. That's their mission, And then, how about this? Imagine that you could test yourself to see for yourself if you've understood it. Imagine that with money. Some of you will pass, some of you will fail. What? I'll fail? Well, maybe, but if you fail, you try again until you pass, like me and my driving test. I failed it, and what did I do? Give up? No. I took it again. Everyone will pass the test eventually. Some people are faster than others, right? You can take as long as you like and pass the test as many times as you like. How does that sound as a program? Does that sound good? So you're going to learn some things. We're going to do it on a demo account. So it's not real, but it's 95% the same. So you get all the emotions and everything. We're going to practice until you prove to yourself that you can do it. And that's when you go, just like a driving test. So what's important is movement. You've got to move, right? From where you are now to wherever you want to go. So let's start with some foundational knowledge. Foundation so we can build nice and high and wide. Okay. Did you know that if you bought a basket of stocks, a basket of shares, right? So Facebook, Alibaba, Amazon, Microsoft, Google, and Apple here, but these are just examples. Did you know that this kind of basket has grown by an average of 5 to 7% a year since the beginning of the stock market? Now, sometimes more, sometimes less. So at the moment, it's going to be less. But guess what? Now is the best time to buy. When everybody else is not buying. When there's a discount on anything, right, most people rush into the shop because there's discounts, the sales are on. Investments is the only scenario where people run out of the shop because they don't understand what they're doing. But they understand that a jeans at $50, which is now $25, it's on the sale, they'll run into the shop. But if a stock which was at $50 is now $25, for some strange reason, they run. That's called educating yourselves, okay? Very, very simple stuff. By doing almost nothing, you would have achieved this. This is called the riding a bike strategy. It's so simple, a child can do it. If you look at the child now, and I really hope I'm sharing my slides here, because I went through this last week with another group, and they said, what slides? So 20 minutes in, I hadn't shared anything. So I hope you can see these slides. This child is kind of half petrified and half having the time of its life, A child finds it difficult. I don't know whether you remember doing it or teaching your own children, but you and I know that of course they can do it. Eventually the child learns to ride a bike. Doesn't matter how much they cry or blood or whatever, they will learn. It's the same with you. You just need to understand what is an exchange traded fund. Have you heard of what an ETF is? Just in the chat, just so I know, have you heard of ETFs? And if you have, are you actually investing in them or not? Fastest growing vehicle in the last 15 years. Which one to buy, but also which one to avoid. Very important, okay? Very, very important. Any that have a leverage on them, you've got to avoid them, okay? Which broker to use? Which broker is it? A CFD broker? Is it a normal broker? Which broker is it? Is it an options broker? Question to you, how many of you would love to learn how to make 5% a year? Now, I want everybody to answer this, so there should be about 590 different answers here now, so let's have a look. 5% a year, go. Yes or no? So far the yeses have got it. There's a couple of no's. Yes, couple of no's, etc. and so forth. Thank you so much, everybody, for playing full out. My answer to you is why? What are you going to do with 5%? Inflation is more than 5%. So you're going to have to do something more than just buying and holding a basket of shares, which might give you 5% on average, not even every single year. And by the way, if you want any kind of sensible money, let's say $50,000, euros, pounds a year, you need at least $1 million invested in your account. 5% on $1 million will give you 50,000. Some people don't have that. So we need more than just 5%. Would you agree? This is really important that you agree. By the way, this sentence is important as well. Unless you start expecting more from yourself, expecting more from your money, well, your money is just not going to work hard for you. And that's what this is all about. Getting your money, listen closely, to work as hard as you do. That's what this is all about. Most people just leave their money languishing and it atrophies and it goes bracken and they can't do anything with it. So if you want more than that, you just have to learn how. Okay, surprisingly simple. You probably wonder why you didn't do it many years ago. So let me tell you what most people do. Most people don't invest. The people that do something. Well, generally speaking, they give their money to somebody else, right? But a very, very few people, surprisingly small amount, because when it comes to money, people are just like, yeah, I don't know. What they do is they do something called buy and hold. You know, they buy, they hold, they pray, hopefully it goes up. This is not a strategy. Another one that some people use is this one. Most of you know it as dollar cost averaging. Okay, I call it price cost averaging because I don't use dollars. So here we go. Most people will do this, okay? They will invest the same amount of money, and instead of putting the whole amount in at the top, and then from then on, they're losing money, right, as it goes down, cut their money up and put the same amount in every single month. Doesn't matter whether it goes up, doesn't matter if it goes down, doesn't matter if it's in the middle, up, down, sideways, every single month. Let's say on the first day of every single month, they will put the same amount of money in, monthly strategy, every month, same amount of money to get an average price over time. Now, how many of you do that strategy, or at least have heard of this strategy? Give me some feedback here. Just looking at the chat here. Mine has atrophied. Yeah, used to do it. Yeah, because there's a lot better. I'm about to, next slide, a lot better. Yeah, heard of it? Yeah, dollar cost averaging. Yeah, it's better than just putting your money in, because now you get an average price. Look, me, if I've done this, right, sometimes high, sometimes low, sometimes in the middle, my average price is in the middle of that high and that low. So I'm now in profit. The person who put all their money in at the beginning in July, their average price is high, so they are at a loss. So already it's better. But, and here's the good news, with a little bit of care, a little bit of attention, I think we can do a lot better than this. Now, what about if we do this? What about if we invest every single month, still simple, but only if, now I hope you're taking notes, because if you're not taking notes, how do you think you are going to learn something and remember it, more importantly, when you actually have time to implement it? Okay, so make sure you take some notes. Now, what I'm doing now is I'm investing every month, but notice I'm only investing if it falls compared to last month. In this month, in November, the price rose. Now, I'm not going to invest there. See the red? I'm not going to invest. I'm only going to invest if it falls compared to last month. Why? Because my idea is to get the average price down, not up. If I invest up, the average price goes up. I don't want to do that. So I'm not going to invest here. I am going to invest here, and I am going to invest here. But I'm definitely not going to invest here because I don't want my average price to go up. I want my average price to come down. Why? So that when the stock turns, what happens? Well, when it turns, and I don't know when, by the way, could be years, could be days. I don't know. No one knows. Even the people that tell you that they know, they don't know, right? But if I keep investing and get my average price down, not only am I going to get into profit earlier than everybody else, but also I'm going to make more money than everybody else because I keep investing as it goes down. So I've invested more money and I get a higher percentage return, because if I invest here and it goes up to here, I've made this much percentage. But if I invest here, my average price comes down. My percentage going between here and here is a lot more than the previous person. So don't worry if you don't understand it all, but just as a concept, is this making any sense at all? Invest only if it has fallen, not if it has risen, same amount of money to get an even lower average price over time. So just on the chat here, is this making any sense at all? Any sense at all? Yeah. Investing in the bear market, that's a good way of doing it. Absolutely. Because guess what? The sales are on and I'm running into the shop. Everyone's running out. I know I'm doing something right when I'm doing the opposite to everybody else, right? Because most people I don't want to use the poor word, but they don't have a lot of money. Let's just put it that way. Okay, good. Now, what about this? Not so keen about people sharing URLs on here. Not so keen about that. Not so keen. Because
I've given several warnings, Marcus, or anybody who does share a link, they get removed from here because we don't want anyone giving any kind of advice. We're here to learn, and only things that are being shared by the Genius U Group and Investment Mastery. So just giving a heads up for those who might not have heard that warning we said a little earlier.
Yeah. That's important because, you know, if we're going to share something, we've done our research on it, and then we know, or we're using it ourselves, you know, not just, you know, somebody putting something on there. People jump on it, they go, oh, there's a link. No, don't do that. Might be a scam. Okay. The next one, look, we can do even better than that. Oh yeah, we can do even better. What about this? Okay, I'm going to invest. Now watch this. I'm going to invest just the same. This is the same chart, right? Every month. Okay, well, I know that. If it falls, yeah, I know that, Marcus. You just told us that. Yeah, but this time, guess what? To get my average price down, I'm going to invest a little bit more money. How about this? 25% more. Not 100%. We're not doubling down. That's casino talk. We are not gambling. This is a strategy with rules. 25% more. So let's say I put 100% in. Next month I put in 125. The month after that I put in 156. The month after that I put in 194. 25% more. Do I invest here? Well, no, because it's red. But also because it's risen. I don't want to do that. I can do... Well, actually, I'm going to ask you the question in a moment. Okay, I'm going to get in here. I'm not going to get in here. I'm going to get in here, and I'm going to get in here. And let's say I put in 1,000 here, for example. Let's say you're putting 1,000. Let's say I put 1,000 in here, I will put 1,250 in here. It gets my average price even lower than the previous strategy, right? So only invest if it has fallen, but invest more money if it continues to fall. Different amounts this time, so that's different to the other strategy, to get a much lower average price over time. The sales are on. Now, obviously, I'm only going to do this on the stocks that I've done my research on. The big blue chip companies where it's almost impossible for them to fail. They have a brand that you know and love and use. Right? Secondly, they have their products all over the world, so that if something happens in one country, it doesn't matter because the other country is still buying, and they have hundreds of different products. There's 3 criteria for this blue chip type of company. Now, the way we do it is even a little bit more advanced, but just as simple. We don't invest at all, even if it falls. What do you mean? We only invest if it has fallen a certain percentage from a recent high. And what that does is it ensures that we never buy too high. So what if it doesn't come down, Marcus? If it only goes up, well, then we won't buy. We're only interested in buying if it comes down. So, for example, this one here, we're not going to buy. Why not? This one here, we're definitely not going to buy because it goes up. But I am going to buy here. And let me tell you why. Please write this down. The only reason that I'm buying here is because it has fallen enough, a certain percentage. I'll give you, so 10%, let's say, as an example, 10%. So, because I don't want something falling by 1%. Oh, look, it's lower, it's cheaper. Yeah, but it's just 1% lower. That doesn't really lower my average price. Does that make sense? Doesn't really lower it. So, but 10% lower. Oh, yeah, okay, yeah, 10% lower, yeah. Okay, so for example, here I wouldn't. Why? Because it has risen. That will raise my average price. Here I wouldn't either. Here I wouldn't either. But I would invest here. Okay, now I'm going to test you. This is really important. Let me see where you're at. Why am I buying here? Give me as much information as possible. Why am I buying here? Yes, you're getting a lower average price, Olivier. Percentage fall compared to what, though? Compared to what? Compared to what? Not the previous dips, no. The lowest price, yes, kind of. Lower price over time, yes. But what about the cost average incremental price compared to previous? Yes, thank you, got it. So I think that was Abin who said, and I know you guys have got this as well, right? Compared to not the previous month. I don't care about that. I care about lowering my price. So when do I get in? compared 10% compared to my previous buy, my previous purchase price. I don't care whether stocks go up or down. The other day I was looking at my stocks going, go down, and then I caught myself going, I was laughing my head off. Who in their right minds wants the markets to go down? Me and all of our clients. Because we've done our research, we know what we're investing in, and when we buy that pair of jeans at 50, I'd rather buy it at 25. Okay, that's where the saying most millionaires are made in a bear market comes from, because this is where you hunker down, and when the bull market comes, you're going to be golden. Okay, so hope you got that. But if you didn't get that 100%, maybe you get to talk to one of my team and they can explain it to you again. Okay, I'll show you how to do that in just a moment. Okay, let's see. Investor percentage, more money. Yeah, we've done that. Massively lowering your average price. Only do this with the safest of assets to make your money work hard for you. And this is what this is all about. Make your money work hard for you, as hard as you do. And I tell you, if you do that, then the only thing that's missing there, you work hard to earn the money, you get your money to work hard for you. The only thing missing here is then to lower your taxes, okay? I'm not an expert on that, so I'm not even going to talk about that, because I only talk about things that I know about. I mean, how simple is this? Remember, the big institutions don't want you to learn this very simple information, because they're spending millions a year on advertising, telling us that we're too stupid and we need to give them our money. Well, we don't need to give them our money, because they're not doing anything. In fact, they're doing worse things than this. They're just doing buy and hold, most of them. Did you know that over 50% of funds are just stock market trackers? They just buy something that's in the Dow Jones or the S&P 500, and they just track the market. You do not need them for that. You can do that yourselves. So you just need to learn how to do it. Which is the safest for this strategy? Which ones, right? Which ones are the safest? Which is the best broker? How much money to put in? And when to exit. Some of you are kind of asking, yeah, but where do I get out? We are looking, you might want to write this down, for a 15% profit. So if you've invested 100 or 100, if it goes up, 15% on that. If it's 1,000 plus 1,000, so 2,000, it goes up 15%, boom. Yeah, the average price needs to go up by 15%, and then we start getting out. We don't sell, we put a stop loss underneath it. Hopefully it carries on going, right? We don't want to just get out. You can do this. We've taught enough people to know this is a fact. Our youngest ever person that we taught was 8 years old, right? In cryptos, it was 10 years old, but in stocks, 8 years old. So everybody can do this. Some of you want more than 15%. What about 25 to 35% a year? That starts getting interesting, okay? Well, if you want that, you just need to, well, definitely not have a kid's bike. You now need to learn how to drive a faster vehicle. The more rules, more learnings, and you can get up to 35% a year with the Buffalo strategy. Okay, now we don't have time to go into a lot of depth here today. However, let's go into a little bit of depth. What is the buffalo? The buffalo roams free in the open prairies of America, right? Going up and down, the ranges, the open ranges of America, you know? That's where the buffalo roam. So imagine it goes up and down and up and down and up and down. And you will see after a while, now I know I can't see the future, I'm just giving you an example here, that at around the 36, there tends to be some kind of a support, and around 45, there seems to be some kind of a resistance, roughly. You'll never get it right 100% of the time. I think people worry, they go, yeah, but what if I don't get it right? You won't get it right 100% of the time, it's fine. Look, just try and buy as close to the bottom as you can. You know, investing would be just getting in once a month, and there are variations on that, which we can teach you, much, much more powerful. But this one here, you only get in when it reaches some kind of a support, and you try and sell as high as you possibly can. Those are the two buttons, buy and sell, right? You buy low, you sell high. Everybody knows that. But what most people don't know is that there are another two buttons. So there's only two buttons more you need to learn, and that's button number 3 and number 4. But let's just start with here, okay? You wait for it to come down, and you hit this button, and then you sell again. You wait for it to come down again. If it does, if it doesn't, you don't. But if it does, you come down, right? Look, you can't go and buy jeans in the sale if there are no sales, right? You wait for it to be on sale again, then you get in. But what most people don't know is you can also do the opposite. You can also sell high, wait for it to fall, and then you buy back. So you're always buying at the bottom. You have to buy at the bottom. and you're always selling at the top. The only difference is, in the first scenario, you bought at the bottom and then you sold. In other words, you bought first, then you sold. Here, you sell first and then you buy. And this drives people mad. They don't get it. I mean, when I first heard it, I tell you, I was so confused. I'm like, what? What do you mean? How can I sell something? I don't get it. The reason you can sell something that you don't own is because when you press the button, the top button, right? Then what happens is the broker says, you don't have the stock. You want me to lend it to you. And so they lend it to you and then you can sell it, okay? Don't worry about the mechanics right now. There's only 4 buttons, buy and sell, and then there's these other 2, okay? So if you want to make money going down, which is 50% of the time, by the way, which most people out there, I'm telling you, hardly anybody does this. You press a button, you sell, as it comes down, you then buy it back, okay? And don't worry about it if it goes against you, because if you buy something and it goes down, you have a stop loss, right? An electronic order that takes you out, dunk. If you sell at the top, wanting it to go down, but it doesn't, it goes up, you have a stop loss above it, okay? So that's enough technicals. I already went way too technical on you here. You press that button, button number 3, it goes down, and then you press button number 4, okay? So, and you keep doing it, which means that I can make double the amount of money. Now, whether you understood this or not, I just want to know, are you interested in at least learning about how to make money? Mouse isn't working, I want to see the chat. Going down as well as up. Yeah? Good. Some of you said you don't understand. That's fine. You can talk to one of my team. They'll explain it to you. Okay, good. Both strategies. Fantastic. Yeah, absolutely. Damn right, brother. Yeah. Okay. So, if you want more than 35% a year, guess what you need to do? Ride a bike? No. Drive a car? No. If you want more, you need a different vehicle. It's as simple as that. So let me just introduce Bitcoin and cryptocurrencies to you. Some of you probably know this. I want to try and explain it a little bit differently. Look, it's a new and powerful currency that doesn't rely on governments and banks. It's decentralized. The current system is centralized. There's always somebody in the middle between me and you sniffing around and saying, ooh, let me just check this transaction. Ooh, I want to get paid. So I don't need you to be there, right? So the decentralized system is if I have a Bitcoin wallet and I want to send it to you, the Bitcoin that is, you have to have a Bitcoin wallet. If I want to send Ethereum to you, you need to have what kind of a wallet? Not a Bitcoin one, it has to be an Ethereum one, right? There's different codes. So that's one thing that I wish I would have known at the beginning. Cost me some money there. So I've been doing this for around, trading and investing for 22 years. But cryptocurrencies for 5 years. And I probably made as much money, if not more, doing this than I have the previous, at the time, 17 years. So this is really, really powerful stuff. Look, we used to barter things and then we used gold, but gold is quite, clunky. So we cut it down into coins, right? Which are very expensive because they're gold. So then we started using base metals like copper, still very, very heavy. So then we went to paper money, and then we went to plastic cards. Why? Because each one was faster, and electronic money is even faster, and then cryptocurrencies. But cryptocurrencies does several things that some of these don't do. For example, cryptocurrency, if you were to send it to the other side of the world, right, not via a bank, so it's electronic, but it's encrypted. If I use cryptocurrencies, I can do it in minutes. It doesn't take 3 to 5 days. If I were to send money from the UK, where I am in London, and I were to send it somewhere in America, it would have to go via New York and then to another bank. And each one, once they're cut, is 3 days. Here, it's 10 minutes. So it's faster. Second thing, if I were to send larger amounts, it would cost me so much because I have sterling pounds, and the exchange rate would kill me, and I would pay thousands and thousands. You know how much it costs when they send $10 million over and it only took 1 minute or 10 minutes? You know how much it cost? It cost about $5. That is $5 or thousands? What do you think businesses are going to do? They're going to use this, right? But not only that, it's safer. Why? Because I own my keys. In other words, I know the code to get in. If I were to send my money to a bank, the bank now owns my money. You could say, well, no, Marcus, I own my money. If that bank goes bankrupt, where do you think bankrupt comes from? Bankrupt. If the bank goes bankrupt, what do you think happens? You might get paid something back, but the vast majority of it you would lose. If I had 10 million in the bank, in the UK, I'd get 86,000 back. That's it. The rest is gone. Here in cryptocurrencies, I have control of my money. Please do your research on this. I know some people are like, oh, okay. What do you think people said that used plastic cards when they introduced electronic money? They said, What do you think people who used paper money said when they introduced plastic? What do you think your grandparents said? They said, no way am I using plastic. What do you think the people who use metal coins said when they said, well, we're going to do paper money? What do you think they said? Every single time. It's an evolution. People will get used to it because it's faster, it's cheaper, and it's safer. Never in the history of mankind has an entire asset class grown so fast because it's cheaper, because it's faster, and because it's safer. Does that make sense? I know that people don't like change. I mean, believe me, in 2016, when I first looked at this, I was telling everybody not to do it, which means that I left $80 million on the table. I've made a lot of money. I've made millions, but I've left about 80 million on the table. And I stopped friends, family, and people who asked me from doing it as well. I am not proud of that, especially since I was telling people not to do it and I hadn't done my own research. I just knew that what I was teaching was correct. It works, and it does work. But guess what? This is the fastest growing asset class ever in the history of mankind. In fact, we are in the mid-90s to where the internet was in terms of adoption. I mean, the growth, there's still so much growth to come. So please don't think you're too late. And, every single conference that I go to or speak at, whatever, the institutions are always saying the same thing. In fact, they're even announcing it. Never mind, telling me in private. Look, JP Morgan, Morgan Stanley, Citibank, they are all offering cryptos to their clients. Not only that, the biggest asset manager in the world, BlackRock. I mean, this is literally 7 or 8 days ago. They said, or maybe it was 2 weeks, but they said that they're doing a joint venture with Coinbase in order to introduce their clients to cryptos. By the way, can I just say, why are they doing that? Well, because they're going to make money out of it. Every time somebody buys over their platform, they're going to get a cut, right? So that's why they're doing it, right? Where there's a way of making money, people will find a way of offering it. Okay, so that's basically what's happening. And this is a screenshot of one of my accounts, but here you can see on the right-hand side, 28,000%. This actually went up to 31,000%. Now, I'd love to know, have any of you made 31,000% ever? Blake is asking, what do I think about CBDCs? Well, what I think about CBDCs is going to be much simpler for governments to send money, control money, etc. But the problem is, because it's all centralized, and once you basically, say, yeah, I'm going to be part of that, the problem is that they really do control everything, and I'm not sure about the privacy aspects of it. So at the moment, I'm leaning more towards I don't like it, but let's see. Because if they decide that it's going to happen, right? But that has nothing to do with cryptocurrencies. Cryptocurrency is a totally different animal because it's encrypted, it's decentralized. CBDCs are centralized by the government that's controlling it. Does that make sense? The other thing, though, it's going to be good for cryptocurrencies because as things get more and more digital, people are going to go, oh, okay, well, then let me try this CBDC. Then they'll start hearing about the truly decentralized one, do some research like I had to do and go, ooh, actually, that's better. So it's actually, I think, a very good thing. What I like about this slide is that I've never seen this before in any of my accounts, where you basically have, 28,000, then 9,000, then 6,000, then 4,000, then another 4,000, then 3,000, because in stocks, and I love stocks, but stocks, you'd be happy with 100%, 200%, am I right? You would, right? If you bought a stock and it went up 100, 200%, you'd be pretty happy. But here, it's amazing because it's a case of, 28,000%. Like I said, it went up 31,000%. You can see the value of it. I only put 2,000 in. I put 2,000 in as 607,000. That's pretty cool. You know, I generally put 1 or 2,000 in this. 1 or 2,000. This went to 98,000, 32,000, 48,000. That's pretty cool. So let's summarize. Stocks tend to be the foundation. It's where everything starts. And for those of you who want to accelerate from that strong foundation, it's got to be cryptocurrencies. But you need to know what you're doing. Of course, like anything, I'm sure you've heard about property, you've heard about portfolio management, you've heard about all the things that the amazing speakers have been talking about. You need to learn how to do it. And is it going to be challenging at first? Well, of course. So is walking, so is riding a bike, so is driving a car. But now, do we think twice about jumping on a bike or jumping in the car? We don't even think about it. We do stuff we shouldn't even be doing. Am I right? Overtaking, speeding, cutting people up. Maybe I'm just talking about myself. Now, we personally suggest learning stocks before cryptos, if you were to ask, right? But of course, it's up to you. We think build that foundation, which is stocks, and then afterwards, boom. And it won't take long. It won't take long at all. I've been trading and investing for over 23 years, actually. Stocks for 23, cryptos for 5, and I adapted the stock strategies to crypto. They're not the same, but very similar. It's just a market that goes up and down. The only difference is how much more does it go up and down? How many of you like volatility, by the way? Let's get an answer to this. How many of you like volatility? There's some great questions here, by the way. Jason, I hope we have time for some questions. I don't know whether we will, because I'm almost wrapping up here, but I hope we have time for some questions.
Yeah, we still have 15 minutes.
Okay, cool. All right. Yeah. Volatility is opportunity. Isn't that interesting? I mean, Philip, I don't disagree with you, you know. Yeah. Yeah, you're absolutely right. Look, somebody just said, I used to hate it, now I love it, because once you understand that actually volatility is your friend, and what we're trying to do is we're trying to find something that is the safest possible asset to buy, which has the most volatility. And it's an oxymoron, because normally the one that is the safest doesn't move a lot. And the one that is, the most volatile is the one that isn't very, very safe at all. So we're really looking for the safest of the safest of the safest, which moves a lot. Look, the strategies work extremely well. We track our stock and crypto results so all of our members can see the results. Actually, I'm going to share them with you, I think. More importantly, our members can compare their results with our official results so they can see whether they're working or not. Oh, great. So this is since August 2020. Okay, and we haven't exactly been in a bull market, The Buffalo strategy, which is our investing stroke, it's more trading really, is 63% on the total portfolio. So we're a little bit down on where we should be, but that's just swings and roundabouts. This thing might be 80% within the next few weeks. That's just the way it happens. So that's pretty good, because we're going for an average of around 3% a month. So we're slightly down. VCA, it's 1,025% on the money invested. So that's pretty good as well. Crypto results, on the money invested in our investment strategy is 1,510%. This is money put in our pockets, sold on the money invested. And on the small cap, 4,320% on the money invested. Small cap is us taking a little bit more risk. Okay, as you learn, as you get better, you're able to do things, just like driving, you're able to do things that maybe you shouldn't do. You take on a little bit more risk when you have to, but it doesn't happen on day one, right? It's a journey. So if you want these kind of results, you certainly can. We can teach you. Our amazing clients are just normal people, and all they wanted to do was to break the chains of financial slavery, like Michael here. Michael here is great. He's actually joined the team now, but before he was a total stranger to us, Most people think that they don't have money, but they do. They're just spending it on other things. Taxes, rent, food, holidays. So what Michael did is he decided, now this is, people wouldn't do this, but he decided not to go on holiday. Most people wouldn't do that. They go, I deserve a holiday. Well, that's fine, but then don't say you don't have any money. You do have money. Even if you don't think you have money, you have money. Put 100 in a month. Start somewhere. You don't have to buy a whole Bitcoin. You know that, right? If the Bitcoin is at $20,000, you can buy $10 worth of Bitcoin. He turned his holiday money, I don't know how much it was, let's say it was 2,000. He turned it into 120,000. That's pretty good. Yeah, we have hundreds of examples like Michael. Marcel Spies, for example, he's been with us for years. He made 132% one year, 1,100 another year, 320, 220, 3,870. He told me in 1 week during COVID, he made 348% on his entire portfolio. Do you remember as it was crashing down? I'm not saying you're going to do this at the beginning, but he knows what to do now. You crawl, bike, car, helicopter, spaceship. Dennis Sahlstrom, again another person, total stranger, 70% he was losing. He's now part of my team, but he wasn't at the beginning. He said he was ready to give up, right? Almost 5 years now, and which is cool because now that we work together, I actually have access to every single trade that he did. So we can actually prove that for 5 years, he's consistently made 4.53% per month. This is an average, but he's very consistent, sometimes a little bit more, sometimes a little bit less. I'm going to show you this just to show you what's possible. This is a gentleman from Belgium. He made $830,000 in just over a year. He even pulled out his money, so this is pure profits. He made 30,000 in 1 day. This is, I don't know what your mindset is here. Just check in where we are in. Is it like, oh, that's easy for them, or oh yeah, look, he's wearing a suit, or or yeah, or are you saying, look, these were total beginners. If they can do it, I can do this. I'm going to encourage you to think that because none of these people knew anything before they learned. This is Rob. He was made redundant, but he still had his expenses. And within 3 years, using our strategies, he was able to make over 400% returns. And here's the thing, he made a total profit of 1.1 million. And this was with stocks. But the point is he's going to continue doing this for the rest of his life. He's now teaching his children. He actually had a pot for his children, which was 75,000. He turned that into 340,000. So he's extremely happy. Busy people, some of you are going to say, I don't have time. Let me tell you, it takes 20 minutes. He's spending 25 minutes on it, but it actually is 20 minutes. And he made over 150,000 profits. This is with cryptos and stocks. This is Michael. He does it together with his family. He has grandparents, brothers and sisters. His youngest is 12 years old. So they do it together as a family. Look, doing nothing is not an option. We know that. Why? Because we're being attacked on all fronts. Okay, so let's finish this off. Where do I start? If you don't like too much risk, start with stocks. Great, stocks. Okay, if you do like risk, start with cryptos. If you're not sure, start with stocks. Okay, get the basics right, build a good solid foundation, right? And then when you have that, you can build up high and you can go wide as well. Listen, some people say, oh no, then let me do cryptos. I mean, I don't like risk, but I'm going to go to cryptos anyway. No. If you start with stocks, you'll be ready for cryptos in a few months. Honestly, it goes like this. I mean, look, where are we now? It's almost Christmas. I mean, come on, where did the year go? It goes quickly. Please don't try and run before you can walk. Walk, and then quicker, and then run. It will go quickly. Okay, there are 3 ways for you to achieve your financial goals. Try and figure it out by yourself. Full of frustration. Costly mistakes. Maybe you don't recover from those, okay? So, the other one is just like spending enough time on it. If you spend 3 to 5 years, you'll definitely learn how to do this. But the thing is, time is our most valuable asset, so you don't want to waste your time. Or you can model someone who already has the results and just do what they do. This is the fastest and most effective option. It's up to you, of course. You can do number 1. I wouldn't do that, by the way. You could do number 2, I guess, but the best one is definitely number 3. Now remember, we're not an advisory service, we're an education service. You will learn how to do this yourself, but you'll be supported by not only my entire team, but also by our community as well. So we're going to learn together. Oh yeah, do this with your family. A lot of our clients, they do it together with their family. Okay, here's some concrete next steps for you. This is to book a call. We have 37 spots available. Book a